Welcome everybody to the Asian Express by In the Money Stocks. My name is Nick Santiago. I'm here with you for another week. This is the week beginning July 21st, 2013. Thank you all for tuning in. A couple things we're going to go over. First, the Nikkei 225 index. This is Japan. Japan just had big news today. It looks like the Prime Minister's party in Japan, Prime Minister Shinzo Abe, just won a decisive victory on Sunday. This gives his party controlling power. As you know, he's a money printer. He's looking to create inflation in Japan. They've been really dealing with stagflation and for a fair degree even deflation for many, many years now, about 20 plus. So he's trying to create inflation in there. We'll see if it works or maybe the country just goes flat broke. But either way you slice it or dice it, right now the Nikkei 225 index should have very, very good resistance around the 15,000 level. If it is able to get there, if it trades through that level, I suppose it could even go higher. But look at this wide range sell-off bar that the Nikkei 225 had really on May 23rd. So there's going to be a lot of selling pressure in this area. So I think traders really want to be aware of it. Even on Friday, the Nikkei 225 was down about 1.5%. So it's going to be very, very interesting to see how this market opens up today, and we'll see if price does trade sharply higher or if price does come down. Right now, I'm going to say you're going to watch for resistance around the 15,000 level if they do rally this market. I have a hard time seeing it get through the 15,000 level with any conviction, but hey, you never know. It's a big election, and it looks like he won pretty easily. So it looks like the country is in favor of money printing and just quantitative easing as we know it. But we'll see how it all plays out. But I think there's still a lot of resistance around the 15,000 level. If it does get through there, then ultimately it can test 15,500 and the all-time, or I shouldn't say all-time high, but the recent high at 15,900. I don't expect that in a single day. But hey, you never know what can happen with these big elections and outcomes. But ultimately, I'm looking for this to stall out and for the Nikkei to ultimately come down lower. But it may see a little bit of short-term upside just due off of the election news. If the market does start to sell off, then we'll watch for lower price ahead. But either way, I think the upside should be limited here. But early in the week or beginning tonight, the Nikkei 225 could get some kind of a bounce off that election results. Let's take a look at the Shanghai Index, Shanghai Composite Index. This is mainland China. Right now, you had a real nasty sell-off on Friday session. Closing below this green bar, that is not a sign of strength. That's a sign of weakness. We'll see if this market can hold the 1950 level. If it breaks through there, I expect the double bottom lows to get tested and ultimately a move down all the way really into the 1700s, so 1720, 1725 area. So be very, very careful with the Shanghai Composite Index right now. They are not happy about the Japanese money printing that's going on. I know Seoul, Korea is not happy about it either. So currency wars, especially in Asia, could be starting to develop, and there could be a lot of territorial turmoil going on there. They're all fighting over a small group of islands that are really not even inhabited by people, but nonetheless, we're going to start to see more and more tension between a lot of the Asian countries, most notably Japan and Korea, Japan and China. So again, brace yourselves. This ride could start to get a little bit bumpy going forward. Let's take a look at Hong Kong. Hong Kong seems to be holding pretty firm. You have a low here, higher low, putting in a little sideways base. This is a little bit of a micro bearish pattern, so there is a chance of a little Hong Kong sell-off. I would not rule that out, but for the most part, you're going to watch each of these lines as upside resistance. If this pulls back, the big level will be 21,000. See how that level gets tested. If that level breaks, then this does have a lot more downside to go, 20,500, and ultimately down to the 20,000 even number. But we'll have to wait and see how that one plays out. Again, this is a little bit of a micro bearish pattern here, so price could start to move down a little bit. If it does move higher, watch 22,000 as your next big upside level in the cards. Looking over at Korea, we're going to look at the Kospi. What you're going to notice here is that Nice bullish base is developing on the market. It does have short-term upside, but you have the 50 moving average here, which will be some upside resistance, and then it's going to be really to the 200. That will be the major resistance level in play. I don't know how high or how far this thing can travel this week, but any failure of this green bar down here, any break of it on a closing basis, this index is in trouble, and the lows will get tested from down here and possibly even lower price than that. So be careful. This is your line in the sand. Any close below this green bar low from the 11th of July, any close below there on a daily chart, that is going to signal much lower prices in the near term. So be aware of that going forward. Let's take a look at the Singapore Straits Times Index. What you're going to see here is that price is starting to make a little bit of a bearish pattern. It also closed below this green bar low. Not a bullish sign. Still below the 50 moving averages. I know this has had a nice little bounce, but this could pull back. So be very, very careful. If it does make an upside move here, what you're going to watch for is a move to around the 33.15 level. That would be really the most upside that I can see in this index on the daily chart. I really don't think it has much more upside than that. But in the short term, please remember, this could be building a bearish base to go lower in the near term. Let's take a look here at, I want to take a look at Taiwan. Taiwan has had a really good reaction. Last week it almost got to our upside target where we were looking for a sell-off. It got pretty close and you sold off sharply on Friday. Also, I believe on the 18th as well. So Thursday and Friday, pretty good sell-offs. This should ultimately head lower. Right now, you are hitting a little bit of support right here, so there could be some sideways action. But if any sideways action ultimately should lead to further downside, and I think Taiwan could easily go back and test that 200 moving average. I think the upside, 8,300, is still a ton of resistance. I think the upside is very limited at best in Taiwan right now. Let's take a look at the Australian markets. What you're going to see here with Australia is that a sideways base is being put in at the moment. We'll see if it can trade up to this level and ultimately 5,100. But I'd be a little bit careful with Australia here just for the fact that you're going to come into a lot of resistance in these two levels. But in all fairness, it is building a sideways base to push into higher price. Any failure of this green bar here from the 11th of July, big date, any close below that low, which is around 49.01, would be a real big negative, and that would signal lower price ultimately in the Australian market. Remember, Australian market is very tied to the Chinese economy as well, since they export a lot of natural resources, a lot of iron, a lot of coal, a lot of different natural resources. Australia is a commodity-rich nation, so we always want to be aware of that going forward. With that said, everybody, that's pretty much a wrap in this week's Asian report. Again, we'll see you next Sunday night for the next Asian Express. Take care, everybody.